everyone, it's Pete Carmasino here at Chaikin Analytics. This is our halftime show here on StockCharts TV. Each and every week, we go through just some overviews of the market, some takes from a weekly basis, looking at the S&P. And we've been, in the last few weeks, kind of highlighting some different features of the Chaikin system and some lists that you can use if you had access to it to locate names that are sort of in different types of categories. And this week, we're going to be looking at the best of the large caps. So just names that on our system are, flashing bullish ratings that are large cap in nature and have very good stock patterns as well. So we'll take a look at some of that. But let's just take a look at what's happening here in the markets today. Look, people are talking about higher rates. We knew that rates were going to be higher. I don't know that that's a surprise to anybody. I think the real issue and why we're sort of on the downside, but in a range, not really falling any lower, not really rallying any higher, or in this, 4130 area, 4120 area for most of the day. And I think we've got Powell speaking this week. That's tomorrow. And, what we're hearing and what I'm reading and what everyone else is reading and probably saying as well is that, he may start to deliver a bigger dose of reality to the markets. And I'm not sure why that's even needed. But, I guess the fact is that markets are looking one way or focusing on one or two things. Powell is maybe just trying to, dampen the effects of the bullish mentality here. There is a bullish mentality here in the market. We've been talking about it now for a few weeks. We've been calling out bullish names, and it's really been about a month ago when the sentiment really started to change to the bullish upside. And then obviously, where did we run to? Right into resistance. And we'll look at that again today. So I like to look at those areas every week just to kind of remind everybody that, there's some really strong positives. There's some neutral setups here, and there's some indicators that are, if not surpassed, or if levels are not surpassed, could cause either a slowdown in the rally any further or potentially even a reversal. Not exactly sure. Bear markets don't have exact owner's manuals to them, right? They're going to be different, a little bit different. They rhyme a lot. Everyone's showing these analog graphs, looking back and kind of overlaying the 2000, area levels of the NASDAQ and the S&P, and it's very similar, and it's a pattern, it's behavioral, and I get all that. But at the same time, it's never been very wise to be too bearish or too bullish at any given time. You just wait for the indicators, and then you react and try to do the best you can to basically mitigate your risk, right? Risk management's the most important thing. I don't care what kind of market you're in at the same time. But, once we get sort of I don't want to even use the word all clear. I want to say more or less a confirmation of higher levels that have been surpassed and maybe even tested as support. Then you can start looking at more aggressive positions and maybe longer term ideas. But look, there's plenty of longer term names out there that have already revealed themselves and are doing well. So you've got to have sort of a mix and a diverse way of looking at things. And I don't mean to say you got to be fully diversified all the time or always in the market or always out of the market. What I mean to say is that understand the environment and adjust your pieces, right? Your players, your chess pieces, your stock picks according to what's happening out there in the market. All right. So let's look at a few names here after we go over some sector reviews, our typical overview of the market, a macro look of it, and then maybe a couple other sectors we'll look at a little deeper, and then we'll get to some of the ideas here on the Chaikin system. So let's take a look right now. All right, folks, we're back here on the ACP platform. And as a reminder, obviously the Chaikin rating is available. You go to plugins down here, a little plug, and it's pretty obvious, right? You click on plugins and you can go and find the Chaikin Analytics Power Gauge. It's $39.95 for the year, right? You plug it in, you get the ratings on individual equities. Okay, I'll say it one more time, individual equities, U.S. equities specifically, some Chinese ones as well, some ADRs and things of that nature. A lot of foreign names are traded here on our indexes. But typically, we're staying obviously on the equity side of our rating. So the first chart I wanted to kind of play out or kind of look at and see what's playing out in this market is the U.S. dollar. Okay, and the U.S. dollar compared to the S&P. Down here is the S&P, and we can see there's a significant correlation here, and some of it, most people could argue that it's inversely related. meaning that when the dollar rises, the index falls. We saw a really strong move higher. The dollar went to 115 or so after kind of plateauing and sitting just under the 100 level. Now, this was last year, March of 2022, where the last rally was. If I squeeze this chart a little bit further, right, and go to the beginning of the US dollar rally, which was very subdued. If you can see this, it was in sort of a range. And then when it broke out, we just started to see a little bit more choppiness and then an absolute downward flow to the S&P. Now, I wish it was that simple and always perfectly correlated. It's not. You're looking at any kind of international exposure of that nature. So I'm going to take a quick look. I don't think I have it saved in here. Oh, I do. Okay. So I'm going to go check out EEM. And I believe I have the correlation to the dollar here. When this dollar started to rally pretty strong, even from 2021 or so, where it plateaued, ran, you can see that happens a lot. If you're not paying attention there, that's that plateau I just had on the other chart. And then the beginning of 22, and really that's when you started to see even the anticipatory effects of the higher rate environment that was being talked about was being anticipated here in the emerging markets. And that's obviously what started this downward trend. Now, we started an upward trend. So why do we start an upward trend? Well, the dollar peaked in relation to its relative previous history here, not complete previous history, but at least in the last year or two, and then has sort of rolled over to the downside, right? Broke that trend, that uptrend here. And what happened on the identical area that broke trend on the downside, this one broke a trend line, the 50-day moving average, simple moving average on the upside. So just pay attention because it's correlated. It's there. It's simple. It's very easy to understand. As our dollar increases, our goods get more expensive overseas and vice versa. So you can see that any multinational names that are reflected in the correlation to the dollar are having this sort of the same effect as some of the EEM. So that's kind of where you're seeing that relief rally, right? Because of a relief in the US dollar, meaning that it has subsided and pushed higher. So that's kind of like, I like to just talk about that, just the overall direction of that dollar versus the EM and even just our own markets as well. So the correlation's there. It's just kind of a reminder to pay attention to it. Don't forget about it. Looking at energy, which has been, obviously a clear winner in the last couple of years, and the dollar has sort of affected that as well. But so is supply and demand. And obviously you can see that the sector is really kind of having trouble breaking out any further above this level of, on the XLE anyway, of around that 93 level. I wouldn't call this, it was about 90 or so here back in August of 2022. But it's in that area of a sort of a range-bound situation that, you've got a lot of push and pull from a lot of different sources here. So let's look at XLF. XLF is, on the financial side of things, right? It's the financial sector ETF here. And you can see relative to the SPY, it's been in a downtrend and started to move higher here recently. And obviously we've had a bullish crossover here on the 50 over the 200. A lot of people are looking at that on the SPY and saying, hey, are we going to see this next situation? And we're going to look at the SPY before we switch over to some stocks. And is that happening? Well, it just started to happen, right? The cross is new on the S&P, but you're seeing it on the XLF. It's a few months old, since December, and kind of holding pat here. It's not really breaking out to the upside. We got higher rates coming. Again, there's a push and pull on the economy from multiple areas, including financials. I'm going to look at communications. Communications turned, it had a really significant trend change, but not so much on a technical, meaning that the moving averages haven't crossed, but the price action has been incredible. And you can thank Meta, with the previous Facebook company, last week with an excellent earnings report, and really pushed this so much higher. And it got really to, you got to really squint. It kind of it broke a double top on the upside, but kind of is subsiding as well. So that brings me to the S&P, because we're kind of in that same boat of, if you guys remember, the way I look at this is I try to look at it on a weekly basis. I try to look at rallies of a 5% move higher from previous lows and count that as a rally. So the rally 1 begins here, it ends at the top. Rally 2 begins here, ends at its top, and so on and so forth. And here we are at rally 5. And Rally 5 is significant, very much like Rally 4, because they're both kind of having trouble around this 4,000 to 4,200 level in that range. Now, people were talking about 4,100 or so. To me, that was kind of just a placeholder, back of the napkin kind of math to say, that's the number. And really, to me, the number was about 4,175. And I think that's kind of what we're saying. Bullish percent here in these three indexes. You got New York Composite, you've got the S&P in the middle, and you got the NASDAQ in the middle and the S&P on the bottom. And the bullish percent is going into the red zone, meaning that it's kind of selling off and there's less bullish signals on these indexes this week. But look at the previous 4 or 5 weeks. It's all been really strong. So, you've got a lot going on there. But when I look at this S&P, I just haven't seen the confirmation that we've clearly broken that 4175 above it, and we haven't come back to test it as support. So for me, I'm just waiting for that to validate, to kind of say, your risk management can be more to the upside. In other words, instead of worrying about the downside, right? You want to, at that point, switch to saying, okay, how do I get more exposure to the upside rather than protecting my downside? Although we do that all the time, risk management is important, as I said, in any kind of market. But you're leaning one way or the other at any given time. Okay, last on the list was, as I said, just sort of an interesting way to look at some names that we have, and we talked about these lists before. This particular list is going to be focusing on the best of the large caps, and you can see the definition. I'll read it for you. I know it's kind of hard to see. It says the strongest stocks in the S&P 500 index, right? So the ETF of SPY, which we basically combine our power gauge rating, the industry strength, and technical strength, okay? So we want to see all three of those sort of ingredients, pushing or leaning to the upside. I've got TLT on here at first because I wanted to just look at bonds and where they were. We're seeing sort of a double resistance here at like 109 and 110 or so. It's not broken that double top. It might even be a triple top if you squint really hard. You can see that, and it looks like that's staying as resistance. And so don't forget that as bonds fall, rates go higher. We're looking at higher rates. There could be a little bit more of a depression here in bonds if we continue to raise rates as we expected. So we'll be waiting for Powell to tell us really what to expect. But starting to look at some of these names. And, I basically wanted to look at some larger cap names. Obviously, we've got all kinds of data on this on our software, right? Tons of information. You see the beta on this particular name. It's an insurance company. It's below 1, which means it's less volatile than the markets. And, you can see it's obviously been in a nice uptrend here and started its uptrend months ago. Doesn't pay a dividend, but you've got interesting levels of valuation. You can see their ROE is about almost 10% or so, which is pretty good for an insurance company. And next year's earnings are kind of in line with this year. So not so much an acceleration, but certainly not a deceleration either. So interesting names. Here's one in the steel group. I know a lot of people know this name, Nucor. Metals and mining have been really, interesting in this market, although down 3.5% or so today, 3.3%. Again, that could be dollar related. We're having a strong dollar today. And, don't forget, this is the push and pull of currencies and the effect of things on our market. And the last one I'll look at is TER is Teradyne, a semiconductor name. Recent relative strength change. We're bullish on it. It's got $3 billion in revenue, a $16 billion market cap, to say, and projected PE about 34. So definitely a growth kind of PE, but getting to the point where it's getting a little lofty here in price. Okay, folks, thanks for tuning in again. I appreciate it. We'll be back here next week with another halftime show here on StockCharts TV. I'm Pete Carmasino. Take care. Have a good one.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.